understand now. Don't you mess with my money. Don't you mess with my money. Don't you mess with my money. But when you do, you're messing with me. Money's a thing that everybody needs. Bet your life ain't gonna go on the street. The quickest way you can know your friend. So let him have some money, then your friendship in. Don't you mess with my money. Don't you mess with my money. Don't you mess with my money. 'Cause when you do, you're messing with me. Now listen to me, people. I'll tell you. Welcome, everybody. Just want to start off today by reminding everybody that PlanToTrade.net is going to be starting our $1,000 swing trade challenge on Monday, March 27th. Okay. And what that's going to consist of is basically one of our traders, Omar here, who is going to be giving out the alerts, buy and sell alerts for those trades. And each trade, the profit goal will be 20%. I just want to remind everybody that you must always do your own due diligence. Okay, never rely just on somebody's picks, because whether it's me or anybody, you always want to do your own due diligence and you make your own decisions. But I'm very excited about this. I think it's going to be a great success. Looking forward to it, and I'll be participating in it as well. Just wanted to remind everybody about that. And then today we are going to be talking about an introduction, basic introduction to gap plays, gaps in general, and also preparing for the opening bell. So many traders ask, what do I do before the open? And it's very simple. Each morning I wake up, I make a cup of coffee, I put on CNBC. Okay, I see what the markets are doing, the overall market conditions, globally and the U.S. Okay, I check the Dow, the S&P, and the NASDAQ. I see what the futures are doing. I simply can do that on my TD Ameritrade mobile app. Okay, futures, Dow futures, S&P 500 futures. You see what the market's doing, the overall condition of the markets. Are the markets up? Are they down? Okay, these things can affect our day trading and swing trades as well. So you want to be aware of that. And we're going to scan pre-market for the stocks that are gapping up, gapping higher, and also the stocks that are gapping lower. Okay, that puts us in position to analyze those gap ups and gap downs to possibly know what to watch for and give us a setup during the day when the market opens. Okay, and we're also going to scan for stocks that have news that day. Okay, and also may have upcoming events coming up, maybe earnings or a conference. Okay, and we also want to have our alerts set from the nightly watch list. Okay, on the nightly watch list, it often says watch for break of, underlined and in bold, of this price. Okay, so I go into my TD Ameritrade mobile app, I click this little bell right here. Okay, NVCN. Maybe I'm going to put an alert that $2 is resistance. If it breaks 2, it can go to 220. I'm going to come in here. I'm going to hit this bell. I'm going to hit NVCN. I'm going to put alert me at or above 199. Okay, because what happens is we watch so many stocks and 20, 30 stocks. We might not be able to watch them all. But if we have these alerts set, it puts us in position. We know that that's resistance. We know the next price target. It gives us a notification. And if it gives the setup, we can take a potential trade. Okay, guys? So, again, I just want to remind you, this is a basic introduction to gaps. Many traders, most traders know what a gap is, but many traders have asked me in chat, what is a gap? And, okay, a gap is a very simple concept, but it is very, very important. I want to stress the importance of a gap, okay? A gap is simply just what it sounds like, okay? A gap means the price of the stock closed up here at 50 bucks, okay? The very next morning, this stock opens up and it opens at 46 bucks. That's a $4 gap. This is a gap down, okay? That's what a gap is with no trading, occurring at these prices from 50 to 46. There was not one single trade placed. No buys, no sells. Okay. Tommy 2 times. What's going on, buddy? So, and same thing here with a gap up. Okay, the price closes here at 44.50. The next day, this stock opens up at 46. There were no price action, no trades taking place from 45 to 46, okay? These are gaps. And gaps can be caused by various things, just regular buying or selling pressure, momentum. An earnings announcement can cause the stock to gap up or down, even an analyst upgrade or downgrade, okay? So we want to be aware of gaps and how we can trade them and how it may affect our trades. Very important. So each morning, you know, SD does a great job in chat. You know, he scans for these gap ups and gap downs. He posts these exact gap scans in our chat room each and every morning. You need to take advantage of them, but you need to know how to use them to your benefit. Okay? So here's a list of gap ups for this particular day, okay? And there it is, TOPS, AVXS, okay? So maybe TOPS was closed at $2. It's gapped up 10%. It's at 242. Okay, it's a 22-cent gap. How can we use this to our benefit? The first thing I do on any gap play, gap up or gap down, I pull up the chart, stockcharts.com, pull it up. Okay, and I want to check support and resistance. You remember from one of my earlier videos, I stressed the importance of support and resistance. Technical analysis is the foundation of all trading. Okay, so I pull this TOPS chart up. It's at 242. Big deal. It gapped up. Okay. Where's the resistance? How high can this stock potentially keep going? Where's the support? How low can this stock fall if it starts to fall? Okay, what do you know? It's got support at 225. It's got resistance at 275. So 275 is the target. If it breaks 275, you look for the next resistance, and it can go to 350. Okay. If it goes under 225, support is $2. If it breaks 2, avoid. Okay, that's how I do every gap play, gap up or gap down. Gap down, STML. It's a $2 gap down. Price is $8. This thing used to be $10. Okay, so if I want to potentially trade it, I look for the support and resistance. It has support at 750. You know it's a gap down, so if it breaks the pre-market high on day, this can potentially move up and fill that gap. Okay, we're going to get into filling the gap shortly here, but it's support and resistance. That's the first thing I do on any gap. Okay, I check the chart. Where's the support? Where's the resistance? I plan the trade, potential targets, etc. Okay, and just here's a quick example. ESPR, very familiar stock, made a big move lately. Did gap down here. Let's ignore that. But you see on the gap up here, okay, so this thing gapped up in the morning. Before the market even opens, it's $33, okay? What do? I don't care. I check support and resistance. Look at this. What do you know? Support, 32. What do you know? Support, 30. Okay. Where can it go? Look at this, 35. This high on day from this candle right here. If that breaks $35, it's wide open. There's no resistance, okay? I took a trade on this. I alerted in chat at 35, okay? Break of 35 was entry, got in. Price target was 40, hit 42. I scaled out on the way up. I sell on the way up, assuring profits, okay? So that was a good example of a gap up. That's just why I wanted to show it. You know, it was here at 32 before the market opened. Well, how do we take advantage of it? We look for the support and resistance. If I know that it can break 35, it can move higher. And that's exactly what we did, and we took a trade on it. Okay, and here's a gap down, XENE. This thing was $9.50, okay? Opens up the next day at $5, okay? You don't see any support on this chart because there's nothing here. And, you know, if you have to, you go to a year, 2 years, 3 years, 5 years, where however far back you have to go to find that support and resistance, you go. In this case, this stock is at an all-time low. There's no support anywhere, okay? Moving forward, if this stock breaks this low on day here at 450, I would avoid it. It's a short. If it breaks this low on day, it's going to go much lower. It can fall to $2 if it wants to. There is no support on this stock, all-time low. And then and to the upside, if it breaks $5, it can potentially move higher and start getting into this gap. Okay. So trading the opening bell. The first hour. That is where everything happens. That is the meat of the market. That's where, if you are interested in day trading, that is where you need to make yourself available for day trades. That is where all the volume is. Okay, that's where the liquidity is for you to be able to get in and get out with profits. 9:30 to 10:30. I look every day to meet my daily profit goal the first hour of the market open. If I can make and meet or exceed my daily profit goal that first hour, work smart, not hard. You know, I meet that profit goal and I can be done for the day. I can just use the rest of the day to study, watch potential plays, look for overnight holds, look for swing trades, etc. Okay? I just want to stress that buying, as soon as that market opens and that first candle starts printing, you notice, you know it because you see it every day. It's up, it's down, it's growing crazy. It's all over the place. It's got volume coming in like crazy. And anybody who buys the opening candle, and I have done it, I'll admit, okay, but it's only in a very specific scenario that's a proper setup where I can see the volume, I can see it broke resistance, but even still, I mean, buying that first opening candle is just such high risk. It's basically you're buying and hoping. I mean, it's straight gambling, and we don't gamble. I don't gamble on my stock trades. Okay, I rely on technical analysis and the charts, but regardless, buying that first 5 to 10 minutes is just extremely volatile. As you all know, you watching that first 5-minute candle going up and down, that second 5-minute candle, it's all over the place. We have no idea. I mean, nobody knows. It's all over. The stock has not created its high and low for the day. It hasn't made its range. It hasn't done anything. We just do not know. Nothing's been established at this point. So we want to stay patient. We want to wait 10 to 15 minutes if possible. We want to let the setups come to us. We want to see how they develop. Maybe it's flagging. You know, can't break 160 that first 10 minutes. All of a sudden that third candle comes. It breaks 160. Boom. Next thing you know, it's at $2 in less than a minute. Okay, so those are what we want to wait for. We want to always have a chart-based reason for buying that stock. You want to pretend that somebody imaginary is over your shoulder, and if they asked you, why did you just click buy? Why did you just buy that stock? Well, I don't know. It was going up. I bought it because it was going up. And that's what our mind wants to do. Our mind wants to buy something that's going up because we think it's going to keep going up. It's a lot harder for us to buy something that's going down or that's down. But, you know, you can't think like that. You need to have a chart-based reason. Hey, it broke resistance. That's why I bought it. It broke 13 resistance. The next resistance or the next price target is up at 1350. That's why it broke that 13 resistance. It held that support, and that's why I bought it. Okay, and this is a quick example here. Okay, look at this one here. Okay, this is a gap up. Closed at 8:30, opens the next day way up here at $9. Okay, happens to be at this second I took the screenshot at 873. Okay, it does come up to about 890. Okay, I want you guys to take a guess at what happens next. If you buy this opening candle, if you buy this the market just opened. This is not even 5 minutes of action. If you buy this opening candle, you are buying and hoping. You are guessing. You have no idea what this stock is going to do at this point. So why buy that candle? Take a guess what happens next. It gets obliterated. If you bought that opening candle, you got your arse handed to you. Look at this thing. It not only fills this gap, it gets demolished. This support right here just gets broke right through it all the way down. What a massive correction. If you bought this opening candle right here, you have instant losses. That is the total opposite of a proper setup and what I preach and what we teach in our chat room. Okay, you want to stay patient. Even this, say, you know, okay, I don't buy the first candle. Here's the second candle. You still want to wait. Oh, look, the third candle. It just broke the low on the day. That's a short. It fills the gap. So that's just an example. You just do not want to buy that opening candle. It's just such high risk. Okay, guys. And another thing is many new traders, I keep trying to stress that the day trades, the best time for day trading is the first hour. Okay, many new traders, they think that, you know, the market has these huge moves in price all day. It just doesn't work that way. In reality, after the first hour, the market is kind of boring. It's really slow. Like I said, I look to make my money in the first hour. I make my day trades. I try and get my profit, and I go about my day. I do what I got to do. And then I keep coming back. I keep checking. I see what's flagging. I look for setups potentially in the afternoon hour, maybe an overnight hold. But I'm not day trading unless it gives a good setup. The volume is going to drop off drastically after that first hour. Okay, guys, you do not want to day trade after the first hour. And here's an example why. This was a previous big runner for myself and so many members in chat. But IDXG a while back here, you can see the massive volume up until 10:30, 11 o'clock. Massive move. Broke pre-market high. That was an entry right there at 60 cents. Okay, created, broke it. But look what happens. 11 a.m., 10:30, 11. Okay, after 11, look at what happened. The volume just dies. Okay, no volume whatsoever. All the way until nearly 3 o'clock. Okay, just flag sideways. You don't want to be day trading in here in these hours. Granted, sure, if you're an expert and you're scalping, if you're just going in, going out for 10, 20, 30 cent jumps, you can do that. But you don't want to make day trades in the middle of the day. There's just no volume. You're going to get burned. Okay, when volume dries up, these stocks can make drastic moves, break support. Next thing you know, you're down instantly. Okay, you don't want to be trading. In this case, it did flag all day. You see what happens. Volume comes back in, breaks high on day, breaks resistance, takes off. Even took off after hours, and I think I overnight held that again. But anyways, so stocks gapping up. Okay, we're going to look at a stock that gapped up recently. This was THLD. I took a trade in it. The day we're going to be looking at is this big candle right here. This black candle. Look at this massive volume. Okay. The price of the stock had closed at, let's call it 60 cents to make our lives easier. 60 cents. The next day, this thing opens up at 80 cents. Okay? So this day here is what we're going to be looking at real quick and talking about. Okay? And here's a 3-month chart or 6-month chart, whatever it is. But you can see the stock had gapped down in the past, came down, found a bottom. Actually looked pretty good with a slightly increasing wedge here. Started flagging here. Okay, this is the day here we're going to be talking about. Again, a gap up. The price closed here at 60. It opens up higher. That's a gap. It opened at 80 cents. Okay, just want to note now, from the gap down, okay, the low from this gap down day up here was 105. So I have that in the back of my head. This is a gap up. So I've done my pre-market analysis. I have my plan. I have my trade, potential trade planned out. Okay. I know that 80 cents was resistance. It couldn't break it here. Breaking 80 cents also gets it into this gap zone again. So basically, I want to see 80 cents break and turn into support. When resistance is broken, you want to see resistance turn into support. Okay, let's take another look. So this is the day. This is pre-market. Okay, on this day here, the gap up day. Pre-market action. Okay, 80 cents was trying to hold as support. Like I said, broke the resistance at 80. It's acting as support now. Bouncing around, bouncing around. Okay, basically I knew 88 cents, let's call it, was the pre-market high on day. You see it tried to break it here, tried to break it here, couldn't really do it. Did spike here up to 96. I want to say 96 loudly because you see here, I end up taking a trade here, okay? These are, I think, 1-minute candles. I'm not sure what, but okay, either way. Now look at this. I alerted this and got in at 9:36. So all this stuff I've just been preaching not to buy the opening candle, I went ahead and did it on this stock here. But again, this was a specific setup and specific trade that I felt confident about. Okay, and the reason being, it broke 88 cents pre-market high. It held basically the 80 cent support it needed to. It was bouncing. I saw it here. It broke 88. I alerted it. Note the price target, 96. Where did I get 96 from? The high right here in pre-market. Okay, so I'm in right here at 88.01. Instantly, never down in the trade. Proper setup. That's what happens. You're never underwater once you get a proper setup entry. Okay, instantly, within a minute, it had hit my price target of 96. I sold half of my position. 50% of my position out. 95.87 plus $360. Approximately a minute and 10 seconds. You see the timestamp there. Okay, and sure, it does come up, test the dollar, ends up breaking $1. I think I was all out. Another minute later at 102. Okay, and there was that 105. It did hit 105 and fill the gap, which we'll talk about soon here. But it did fill the gap, and I think someone in chat even said, well, why are you selling at 102? It's going to go to 115. You know, could have came up here and tested this here. I don't care. I got mine. Look at that. Plus 550 in a 2-minute trade. That is well exceeded my daily profit goal in 2 minutes. What's better than that? I'm in and out. You don't want to be greedy with this first hour day trading. You get in, you get out. You take your profits. You're happy with it. The price target was hit here. I sold half. Get in and get out. Take the profits. If somebody else wants to chase, leave the scraps for them. Okay? And just here was another look at that day. And you see, we had the day trade right in here. Okay? Alerted at 88. Boom. Out 96 half. Out 102. And that's exactly why you take profits when present. Because look what happens next. This thing falls apart. Not only does it come back down, now, came back down to 80-cent support here, okay? If 80-cent support would have held and this would have bounced back up to 90, would have been the price target resistance here, but breaking 90, $1 price target. If this would have held at 80 cents, it's still in play, but it doesn't. The chart tells us, get out right here. Even here, it broke 80 cents, it broke below 80. Get out. It broke support. And look what happens. It falls apart and goes all the way back down to 70. So when a chart tells us something, we don't want to avoid what it's telling us. It's telling us for a reason. Hey, support was broken. I'm going to go way back and potentially fill this gap even lower. Okay, but that was a great trade. 2 minutes, $550, just like that. Proper setup. Because of the pre-market preparation. That's why I was able to make that trade. I did buy the first minute, which I do not recommend doing, but in this case, it was a good setup with good volume, good momentum. I took advantage of it, got in and got out. Okay, and so with stocks gapping down, because this is an intro, I don't have too much for you on stock gapping down at this time. We will talk more about this in the future, but you see here, stock was 33 bucks, opens up the next day, 30, 40 cents lower. Okay, so we're watching it. It's flagging. 3rd minute of the day, it does break this pre-market high on day, or this high on day from the first candle, and that's what we look for on a gap down, when the price can actually break above the highest point in the pre-market or the highest high on day. Potentially, this right here could have came all the way back up to 33 and filled this gap, but it was a fake out, and that's what these do a lot of times. Okay, it made a new high on day, but look at that, poof. Right here, when it broke this low on day, the low on day here, when it broke right here, that's a short signal. Could have shorted it, poof, way down, okay? But a lot of times, stocks gapping down can be very profitable, okay? This one here was a recent 2017 trade here back in end of January, February. Stock was $2, gapped down all the way to 50 cents. Oh, hate to see that kind of stuff. And that's potentially the risk of holding stocks overnight. You can wake up and lose 75% overnight. So always want to keep that in mind if you're going to hold a stock overnight, especially a penny stock. Regardless, this stock gapped down. I think I had a little, they call it a dead cat bounce. On a gap down like this big, a dead cat bounce is simply, hey, this stock is so beaten up, it's going to bounce a little bit. It'll go out. So we benefit off of that by taking a day trade. Took a day trade in here, sold. The next day, I still have it on watch, and I'm watching for this high on day right here from the gap down day to break. It did break it, and that's when I took an entry at 58 cents. Alerted in chat, 58 cents. Okay, it does try and hit 60, ends up closing at 59, I believe, but I did hold it overnight because it closed in the gap zone, closed above this high on day from the gap down day. Look what happens next. I got in at 58 knowing that if this can break 60 cents, it's going to take off. And look what happens the next day. Whew! Woke up to money. This thing opened at 60 and took off to $1. It was a beautiful trade for myself and many members in chat that took the trade with me. And so that's the potential of stocks gapping down. Okay, and that's why we watch them. We don't just watch them the first day they gap down. They stay in play, especially if they give a setup like this. Okay. And so filling the gap. You hear me say that all the time. I put it on the watch list. I'll put gap fill PT, gap fill price target. And what that means is, okay, filling the gap. So this right here, you see the gap in this yellow box here. Okay, it closed at $12.75. The next day opens up at 12. Let's call it $12, 12.10. Okay, price comes down, flags a little bit, whatever. Comes back up. It breaks this high on day here at 12.10. It enters the gap zone. Okay, it's now in the gap on this day. The next 2 days, boom, it comes back up. It prints. Remember, a gap is an area where on the chart where the stock did not trade anything in this gap. Right here, it filled the gap. It had trades at all of these prices now. It filled the gap, and so that's why gaps are so strong. Now, many traders will say that all gaps get filled, and it's really not true. But in my experiences, and many traders will tell you that 90% of gaps usually do fill. 10% of gaps just will plain never get filled. And the thing with gaps is we just never know. Okay, this one here, it took gap down 1, 2, 3, 4, 7 days, and this gap is now filled. But sometimes they can take a week. They can happen that same day. They can happen the next day. They can happen a week, a month, even a year later. But gaps are always in play, and that's the potential importance of gaps. I mean, you even see there was another gap up here, and sure enough, 7 days later, look at that. It had trades at these prices and filled that gap. Same thing here. It was another gap. These are common gaps. We'll get into that in a minute. But gapped up here. Look at that. Had price action now in this gap zone. Okay. And so there's different types of gaps. Because this is just an intro, I can't go over everything. I've already been rambling on for 26 minutes, but there's different types of gaps. There's a breakaway gap. Basically, there's 3 main types of gaps. Breakaway gaps, okay? And these occur, okay, the stock is in a trend here. It's kind of just going sideways in this channel. And boom, you get a nice big gap up and a run. That's a breakaway gap. Okay, it was in a current trend, and now it gaps up and creates a new trend. Okay, that's a breakaway gap. Can be very powerful if you catch that as a swing trade. Okay, maybe in here somewhere and just ride it all the way up. Beautiful breakaway gap. Okay, and we also have exhaustion gaps, and that's simply exactly what it sounds like. Okay, this stock was on a beautiful trend. Okay, absolutely beautiful. Moved from under $45 all the way to 80. Whew, 100% in no time. Okay, exhaustion gap. The stock gaps even higher. After this massive move, it gaps up even higher. Whatever caused the gap, it gapped up. This is an exhaustion gap. Okay, basically, this trend has been so prolonged that traders just finally come in, shorters step in, and they just say, enough is enough. This stock is overpriced, overvalued, and it needs a correction. And there's the exhaustion gap, and just poof, the trend now reverses because of the exhaustion gap. So those could be a warning sign. Very, very powerful gap as well. Okay, and we also have simply just common gaps, and those are just the most basic gap you can ever have. It's just simply that. It's just a common gap. It just occurs at any point in time. The price is here at, let's call it 10. It gaps to 12. It fills. So common gaps. And common gaps can occur intraday. The price can be 102, and all of a sudden, the bid is 101, the ask is 103, but all of a sudden somebody pulls the ask and the ask is 105, somebody puts a market order, it fills at 105, you have a common gap now intraday. There was no prices that occurred at 102 to 104. That's a common gap intraday. So these can occur daily, intraday as well. So just want to go into, charts are just so powerful. There's so much to learn, and, knowing charts and studying charts, the language of stocks, the language of day trading is just so important. It's so powerful. Okay, you study these charts and you start to learn trends, you recognize things. The more you see something happen, the more you can rely on it. My mentor always spoke those words to me. Okay, and that's why we study charts. Okay, so you have all of these different setups here of candles that can occur. These are intraday candle setups. Okay. So all these here are bearish. When you see something like this happen intraday, look at it. Oh, red candle. Oh, nice. Green, green, green. That's actually bearish. You would think that's bullish because it can keep going, but when it prints this big red candle, whew, you want to get out of that thing. This thing can go down. Okay, so knowing these setups can be very powerful. And these here on this side are bullish. Okay, and this is one of my favorites right here. Okay, you had a nice big spike at the open. That's why we don't buy the opening candle. Okay, you get 3 red candles. You might think, whoa, this thing's going to go all the way down. But no, it prints a bullish 3. Green candle here. Breaks higher day. This thing's going to break out. That's a beautiful setup, okay? And even this one here is another one of my favorites. That's where the nickname came from. We'll get to it in a second. But red to green, okay, you get 3 red candles. That looks bearish. That looks terrible. But when this thing prints a green candle here, it can reverse, and this can go red to green and make explosive gains. Maybe you bought down here minus 10% on this break right here, this candle high. You buy the break there, knowing that if it gets through here and gets through the high on day, this can go red to green, give massive gains. And we're actually going to look at that now. It's where the nickname comes from. I fell in love with it. Just one of my favorite trade setups at the open. I can't remember the exact symbol, but this stock was about 2 weeks ago. I think it was DRWI, actually. DRWI. This thing, low float. You can see the massive volume all of a sudden, whatever pump, whatever news it had. Regardless, it was 120, okay, the day before. This thing gapped up and opened at 175. Woo! Big gain for the people that held overnight. Okay, and remember, you never want to buy this opening candle. Look what happens. You buy this gap up, whew, right away you're down at 150. You're down 25%. Okay, but still, so I didn't buy the opening candle. I want to watch this. And why do I want to watch it? Let's look what happens next. Okay, gapped up at 175, opened at 175. Now it's down at 150. You can tell now it's starting to put in support here, 145. Okay, 140, 145's got support. Prints its first green candle of the day. Okay, notice 160. 160 is a key level. Okay, it tried to break it here, here, and here. 3 candles in a row. Tried to break the 160 level. And I'm sorry, these are actually 2-minute candles. They're not 5-minute candles. Okay, so really this is still just the first 10 minutes of the day. Being patient, letting the setups come to me. Okay, gapped up to 175, came down. Want to watch this now as a red to green. Can be a very explosive trade, and this is why. Okay, so when if I was to notice this and during market hours here, I'm watching this, I'm saying, hey guys, I like DWRI. Watch it for 160 break. Look what happens next. Breaks 160 here. That's an entry on this candle here. Breaks it, and just knowing that, okay, I'm liking it for a 160-cent break. Okay, $1.60 break. I'm liking it knowing that, hey, the price target's only 175, but I know that if it can get through 175, this thing just went red to green. The stock was red, now it's green. Explosive gains, knowing that if it breaks 175, the previous high on day, okay, because you see at the open, it gapped 175. Shorts were winning. The shorts, everybody's short and short and short, and they're happy. They're winning. The stock's going down. They're making money. Now you start to find buyers. Buyers come in. Buyers come in. Okay, shorts are going to panic. If I'm watching this for a 160 break, I get in around 161, knowing that my price target's 175. But hey, if it breaks 175, we can have an explosive move, red to green, one of the best trade setups personally for me. Okay, shorts start to panic. If this gets over 175, shorts are in trouble, and they will panic. Okay, and this thing not only breaks 175, makes a new high on day, but rips to 230. And not even before 10 o'clock. So the first half an hour, you're in and out on a red to green trade, probably done for the day. Okay, you got in here pretty good at 160, maybe bought even more, bought the breakout of the red to green, new high on day break here, and you start scaling out on this candle here, selling half, selling more, selling more. I sell on the way up, assuring profits. You don't want to be selling on the way down. Okay, and you see what happens the rest of the day here, just kind of. You see what happens after the first hour. Once again, all that volume came in that first hour. Look what happens. No volume. Volume drops off the face of the earth. And it just flags sideways. But, and you know, I'm not day trading during this time, you know, lunch hours, but we're watching, say, hey, guys, this thing's flagging, you know, breaks $2 here. It can move, you know, tried to, but, you know, did pop here, and then it had a terrible close. But so that's the power of a red to green setup. That's one of the ones I look for. And, you know, again, this was just an introduction. There's so much to talk about. I hope you guys learn from it. You should know now what a gap is. And it's very, very important, very, very powerful to know how to trade gaps, gap ups and gap downs. Okay. You now know what you should be doing. Well, that's what I do pre-market every day. You know, I'm scanning, I'm looking at the overall market. Is it up? Is it down? What kind of events are coming up? You know, last week we had that massive healthcare vote, and that had a huge impact on the markets. The market wasn't even, day trades were really scarce. You know, besides that HTGM, low float short squeeze, really it was hard. Day trading was hard. You got to be cautious. You got to get in and get out on these day trades when the market is in those current conditions. always know those key pivot points and those watch to break for prices, as well as your support and resistance. I just cannot stress, I sound like a broken record, but I cannot stress how important those support and resistance levels are. That's how I plan the trade. That's how you should plan the trade. You should always know where the resistance is, where the support is. That's where we get our price targets. And usually, I'll focus on the gappers just the first 10 minutes of the day. I have my alerts set on the watch list stocks for those price break levels, so I don't have to focus all my energy and all my time and all my charts and all my screens on those stocks. I can focus on the gappers, the gap ups and the gap downs, ones that have, hey, if it breaks 250 resistance, the next target is $3. The next resistance is $3. I focus on those gappers those first 10 minutes and look for the pre-market. Usually the pre-market high on day on a gap up or gap down could be a potential entry. So I'm focusing on those gappers. Okay, always study to win. Okay, I just can't stress how important the preparation is. Okay, our team's been doing a great job. Everybody's been working together, and that's what it's all about. Studying these charts, knowing the price levels, knowing what to look for. It does no good if you're watching. You could watch every stock in the whole market. You could watch 100 stocks on your watch list, but if you don't know, if you're just looking at it, there's green colors. Oh, there's red color. That doesn't do nothing. You need to know if it breaks this price, it can go to this price much higher. That's where you make money. That's where you get in the good trades. All right. Again, I just want to, if you have any questions, you can message us anytime in our chat room at Red to Green Only Takes One, SD Hillen 275. Email us anytime at teamptt2pp@gmail.com. And please, if you're not a member, visit our website. Sign up now. We offer a 7-day trial. We'll talk to you soon, guys. Have a great night. Gotta make sacrifices. That's how it is.